Oops. Good evening, everybody. Saying we have a dark and stormy evening here in Pittsburgh, Pennsylvania. I think it's 1 degree and the wind is blowing like crazy. I know you're all waiting for the nature report. I was enthralled to see that we had 7 huge wild turkey would come down for the corn that I put out every day. Then it grew to 22. And when I was looking out the window today, thought something's wrong. We counted it, and there was 37 wild turkey out there. And I'm not even sure the original, what I call the Magnificent 7, was even in that batch. So somebody's put out the word. Yeah, and then when later on we had approximately 11 deer out there. 40 below, geez. Oh, I hadn't even thought of that. I still have 2 cars sitting outside, but I don't think they pay attention to the cars. We had such a wind here last night that the lid for the garbage can that I have used to fill up with corn to feed the deer, this morning I couldn't even find it. It was gone. Heaters were down. It must have been windy. All right, well, welcome everybody. Our first morning session. We've got quite a few new people that are coming in to see what the website's all about. What we usually do on these Monday nights is kind of go through pretty much the picks that we have made over the recent past to kind of re-emphasize why those picks were made, kind of analyze what the market is doing in general. And we always take a quick scan through the commodities and currencies just to see if any of those, number 1, are tradable, or number 2, that they're affecting the market direction. So, hold your individual stock requests until I tell Jim to do the double line, and try to keep your request to 2 tonight since we have so many people, and we'll try to get to them all. But as we go through the charts, for those that are new, it's more so that people can kind of gain that my droning analysis of why charts look good, why they look bad, and what you probably should do with them. All right, as we can see today, the market was still a little bit soggy, which is unusual for the first day. Now, we could consider the first day, but that was still in a holiday week. Today was a kind of more oriented toward it being the first day of the year. And today was not really that rambunctious. And usually on the first day of the trading, meaning when everybody gets back from the holidays, which they probably weren't last week, you kind of get a good feel, or a definite feel, for what everybody has analyzed over the last 2 or 3 weeks while they're on vacation, to come back and kind of assess what's going on, or what's going to go on in 2014. Or into the coming year. And usually you'll see which sectors are coming out of the chute strong, and that usually means the big money has decided that's the sector to be in, or at least the first quarter of the year. But we didn't see that this year. So I think the fact that they kind of did some profit taking because of the gains of 2013 over the last 2 or 3 trading days now kind of offsets which sectors were planning to come out of the chute strong. So as we can see, the Dow, even though it had a down day, still hasn't had a real major reversal signal. So we can consider this, even though it's pulled back, we're still above the T-line, and it wouldn't be too unlikely to see a J-hook pattern off of this level. Yeah, there's some biotechs up today, and that's usually an indication they were acting fairly strong in 2003, and probably they're coming up with a conclusion they're going to still be strong going into 2003. 2013, still going strong in 2014. Well, the S&P backed off more than I thought, so that's a little bit sluggish. And our NASDAQ also trading back below the T-line. So this is kind of giving us the inclination that obviously there's a sell-off going on, but not anything that yet has altered the investment sentiment. The Russell 2000, same scenario pretty much as the NASDAQ, that you're now trading back below the T-line. But more than likely, let's see if I can make this chart, that if it pulled back, we're still in this slow uptrending channel. So what makes this market strong is the fact, let's just take the Russell 2000 as an example, comes up, it consolidates, comes up, consolidates. That means when they zigzag it up, there's not any exuberance coming into the market. It's still maintaining good strength because the profit taking is occurring on the way up. So every time it comes up to the top of the channel, they sell it off to the bottom of the channel, and they take it back up again. So that makes it pretty evident once we get up to the top of a channel what type of signals we see. And in this case, it's probably conclusive that we're going to be backing off. Now, is this back off as extreme as the up move? No, because it only has to come back a little ways to get to the bottom of the channel, and then they start it back up again. What does a red sandwich mean? Oh, this is just showing that this is a left-right combo over the last couple of days. So that means they're definitely selling. Bad meat through it. Okay. And let's see some of the other indicators. Crude oil is just getting battered. Notice the bearish doji sandwich here. So if you observe the obvious is ever since they've broken this down, we're still in a downtrend. So where's our next target? You can probably draw a line parallel to this downtrending channel to the bottom. That means you could come back down toward the $90 area. Interest rates starting to bottom out a little bit, meaning bond prices are bottoming out, which means interest rates have a possibility of climbing back up. And in the overall scheme of things, interest rates are still relatively low, and it would take a severe drop in bond prices to tell us the rates are going up. And right now we're just kind of seeing it back and filling. It's pretty much supporting at the same level as supported over here. This is the 10-year notes. And this is the 30-year bonds also kind of supporting at the same level. It bottomed out over here with some bullish trading. If they break this level right here, it means we're going to pop up probably back to the 50, which once again means interest rates aren't really going anywhere of any great consequence. Lean hogs trying to bounce back up. Feeder cat or live cattle. When it broke out, this is the type of charts that we want to watch for. This candlestick buy signals, kind of a bottoming action that tells you they're not hitting new lows, and then they break out through a resistance level. That's a very high probability trade setup. Yes, these are recorded. So if you fall asleep, at least you have something to look at in them later on. Let's see, soybeans. Kind of that rolling over, but bounced off the 50. I'm sorry, the 200. Should be a bounce back up to the T-line. But if they fail at the T-line, as we can see, this is a dumpling top, which means a failure of the T-line could slash it right on down. Dumpling top's the opposite of a fry pan bottom. I think Mike means the comments just at the close of each. Oh no, those aren't recorded. What else are we going to look at? Gold. Gold tried to come up today, but as you can see, we're in a downtrending channel, and the more we can anticipate that this downtrending channel has to be breached and we start seeing indecisive signals, the more we can anticipate they're going to take it back down to the bottom of the channel. We need to see something strong. In this case, we probably need to see this break out through the 50-day moving average to tell us that this downtrend has been breached. Same scenario with silver. Silver, as we can see, has been moving sideways. We're almost running out of steam on our stochastics, and we haven't gotten back up to the 50. So that pretty much means if we get up to the 50-day moving average on silver, with stochastics in the overbought area, we probably run out of steam, and that 50 is still going to act as a resistance. Like the coffee chart, this is kind of that little scoop pattern, and there's your best friend, the doji, especially off the support level, gapping up. More than likely, your logical target is up here at the 200-day moving average. See, I'm trying to grab corn. Corn still in a slow downtrend. It is starting to kind of bottom out. As you can see, the bottoms are getting less pronounced. So I wouldn't be buying corn until it breaks through the 50. Right now, every time it comes up to the 50, we can see it obviously acts as a resistance level. And wheat looks like it might have just turned around. So you have a bullish engulfing signal, you have a doji. They're trading a little bit after hours. But what we would expect is a doji sandwich. If it's all a doji sandwich, we know at least our trade would be to the top of this downtrending channel and then possibly up to the 50-day moving average. The D and the K, that's just your stochastics setting. One is D and one is K, and I, for the life of me, have forgotten what they mean. But I'm not really concerned about what a D and K means. I'm more interested in where is the stochastics when I see a buy signal and where are the stochastics when we see a sell signal. The dollar, trying to bottom here on a double bottom. There's your doji, gap up, your best friend. I would still be inclined to be buying this, even though it backed off today. You're not in the overbought condition, and you didn't close below the 3T. And we're going to be, for you new folks, part of the training on the Candlestick Forum is that instead of you having to buy all the videos, we do hopefully about a training a week where we do concentrated analysis on. We might spend one evening on effective stop losses for candlesticks. Another evening we might be doing a scan, how to set up your scans. Another one might be how to identify the highest profit trades. Another one may be how do you set up effective option spreads. So instead of buying all the CDs, we do it live, and that's all part of the membership. So along with the membership, you get hopefully somewhere around $200, $300, $400 worth of training education during the month. But so that I say this because one of our strongest signals is what we call the best friend, and that's a doji followed by a gap up. Notice this doji followed by a gap up had enough strength to push us through this little downtrending channel, which means you start seeing the dollar act stronger tomorrow. You probably want to be a buyer because this tells us this downtrending channel is not resisting anymore. So we've got a wave 1, a wave 2, and if wave 1 is the same magnitude as wave 3, that pretty much makes our 200-day moving average our next likely target. And so we did silver, dollar, Japanese yen. Finally has bounced up out of this oversold condition with a bullish engulfing signal, kind of a doji sandwich. And a doji sandwich is significant because they take it up, there's a day of indecision. They take it up again, that pretty much tells you what their decision is. And that usually has a follow-through of additional buying after a doji sandwich. Euro, with the gap down, even though it came up a little bit today, I would still be inclined to think, especially if it came back down through the low or the open of today and the close of the of Friday, that you're still in a downtrend. opposite the dollar where you have a double top, right about the same level it topped out before. Let's see. I think live cattle, I knew that. And I forget what wheat is. Somebody else probably knows that. Does it matter which line leads the stochastics? No, just as long as, now obviously your blue line is the fast stochastics, or faster of the two. But we're more interested, we're not worried about what the stochastics are doing. We're more interested in where are they located when we see the buy signal. Okay, what else? We did interest rates. We did coffee. Let's see, cocoa. Cocoa, you can still be shorting if it opens weaker tomorrow. Sugar, that's your bearish J-hook setup, which makes this very simple. If this opens lower tomorrow, essentially what do you have? You have a bearish doji sandwich to the downside, which means there's going to be more downside, which means they're not going to support at this level, which also means this could be wave 1, wave 2, wave 3 could still be very extensive. And natural gas, once it's failed the T-line, this one, all you can do is stay short until you see a buy signal and a close above the T-line. Let's see, did we do the British pound? British pound's the kicker type signal, and below the T-line you stay short. Yeah, the ETFs on the commodities are still fairly new. The nice thing about, not pushing any one brokerage firm over another, but the nice thing about Thinkorswim is you can trade your commodities, your options, your stocks, all from one account. You don't have to shift money back and forth. Peter, I have a hard time getting the, I don't know why we don't get, I've been meaning for months to get all the currency combinations on here, and I don't know what they are yet. How do you trade gold? You can buy the gold contract. This is the this February contract. You can buy the February contract, or I think you can buy GLD. GLD. You can trade the trusts, which means you can buy the options the options. Okay, yes, and then some of the silver you can buy by trading, SLV. I think. Okay. Moo. That's the agricultural in general. Let's see. GFF4 is feeder cattle. That's got a nice little rounding bottom. All right. Now, what we usually do on Monday nights is with the members, we usually go through more of the positions that we've been recommending recently, why they were recommending, and what to do with them now. So we recommended Valero. I think we had small positions here, but recommended more when the J-hook pattern occurred. And notice what the Valero has not been able to do. And this is one of the things that I try to emphasize to everybody, that as long as you don't see a candlestick sell signal and a close below the T-line, you stay long. Now, the argument is, well, this one gapped down and did an indecisive trading day just below the T-line. What should you do? Well, I usually give it one more day. If it opens lower, I close out the position. If it opens higher, it tells me the uptrend is still in progress. Why would I give it one more day? Because historically, for the last 2 months, it's been pretty much trading above the T-line. So I'll give it some more time. Let's see. Okay, along with Valero, we'd also recommended ALJ when it did this big kicker signal and a close above the T-line. Pretty much, this was the only scary day. We gave it one more day, but it came right back up. So we'll stay long until we see a sell signal. Now, we've had a kind of a bearish day, but then a shooting star day today. But same scenario. We're going to stay in this as long as it doesn't close back below the T line. STX has a nice looking chart. There's your fry pan bottom. There's your little cup and handle. There's your breakout. Notice what it hasn't been able to do is close back below the T line. And this is why I kind of want to address people's fear of watching the stock pull back and getting overly concerned that it's time to take profits. And basically, when we're using candlestick signals, we're playing the probabilities. Every time we see a signal or a pattern, we know the probabilities are in our favor. We also know that if you don't see a close below the T line, the probabilities are in your favor. You're still in an uptrend. So note what's happened here. Close right on the T line. Makes it very simple the next day. What do we need to see? We need to see it open positive and trade positive, staying above the T line. Now today, note what they did. They did a doji right here at the resistance level. This is why knowing some of the very simple trading rules with candlesticks makes this very high probability trading. What do we expect after a doji? For the price to move in the direction of how they open it after a doji. So if this opens positive tomorrow, number one, we have a good probability that's going to move positive. Number two, since it had a bullish day then a doji, the probabilities of this day right here having the same magnitude move as this day is pretty good. So even on a day trade, that becomes attractive. And number three, as far as holding or buying the position, it tells us that if they move positive from here, they're breaking out through this little resistance level, that we probably have more upside. The T-line is the 8 exponential moving average. For the new folks, we use the 200, the 50, and the 20 simple day moving averages because all the money managers in the world use those moving averages to make their decisions. We also use the T-line, which is a very strong trend indicator, as we've been mentioning, that if you see a candlestick buy signal and a close above the T-line, you stay long until you see a candlestick sell signal and a close back below the T-line. We also will be doing training here pretty soon on how to do your entry and exit strategies, fine-tuning them. This little green line is the 3 T-line, the 3 exponential, which works in conjunction with the T-line in the fact that we know that the further away you move from the T-line, the higher the probability they're going to come back and test it. On the other hand, the further away you move from the T-line, the more effective or the more importance is now applied to the 3T. If you see a candlestick sell signal and a close below the 3T, you've probably got a head start to realize they're going to come back to the T-line. You can take your profits and then always buy back when it hits the T-line. Laura, your question at 8:23. All right. So if I am not near a computer during the day, do I not set a stop at a stock like XTX until later? Wait one more day? Let's see. If I am not near a computer during the day, do I not set a stop on a stock like STX until later? Wait one more day. I don't understand the question, Ori. If you own this stock, obviously the closer you are to the computer, or as often as you get to the computer, the better your trading results are going to be. But because of the logistics, there's some people that work and can only get to the computer maybe after the close. So if you own this, you continue to own it, but where would be the place that you will want to close out the position? Well, today I'd probably have a sell stop saying if it closed back below whatever this number is, 56, which means it's closing below the T-line after a doji at the top, I'd close out the position. So a lot of people ask, well, how big a percentage loss should you take on a trade? And the answer is, doesn't make Me and a hill of beans is what percentage. What we want to see is where is the chart telling us that the sellers are in control. Sometimes that's a 3% loss. Sometimes that's a 0.3% loss. Sometimes it's a 13% loss. All depends on the chart itself. No, closing means the close of the day, the last trade. Remember, the Japanese rice traders have created candles because of two important decisions, where they opened it and where they closed it. Everything during the day is noise. So there's lots of times, and you will see me, and somebody says, oh, should we close XYZ because it's trading below the T-line? I'll ask them, what is the daily signal? And the answer is, it's not a daily signal until we get to the end of the day. Okay, let's see. Yeah, and I think we are going to be getting things set up to where you can get a lot more information through the smartphones. Okay, you have kids? All right, that's a good idea. Okay, let's zip through some of these. XOMA, another recommendation recently because of the J-hook pattern. Now, somebody was asking earlier before, how do you tell the difference between a J-hook pattern and something ready to sell off? Because we know the characteristic of each signal. A doji, spinning tops, pretty much tells us there's indecision going on the pullback. So that gives us a good inclination that the sellers aren't really convinced about selling it off. We get prepared to start watching for buy signals to see if a J-hook pattern. What's our prerequisite for a J-hook? Is a strong price move. So anytime we see a strong price move and then there's profit taking, which is indecisive pullback, get ready for getting back into a position. Or if you miss this move, get ready for this move, because we can calculate what this move is going to be based upon the magnitude of this move. So right now, everybody's saying, well, how do you count your waves? This on this trade was wave 1, wave 2, wave 3. If I'm looking at this right now, I'm looking at wave 1, wave 2, going into wave 3. So anyways, this one can still be bought, and these make it very simple. What do we expect coming out of a J-hook? For it to trade positive. What do we not want to see if this is a J-hook? For it to close back below the T-line. Scoop and J-hook? No, a scoop will have a flat handle. And let's see. This has a semblance of a scoop, but it's flat handle and then a scoop, whereas a J-hook has a strong price move and then an indecisive pullback. No, a doji is not mandatory. A doji just represents indecision. So if you've got a lot of indecisive trading going on, like spinning tops, little hammers, little inverted hammers, things that show indecision between the bulls and the bears, and the doji obviously is the ultimate as far as indecision, because they're closing it, opening and closing it right about the same level. But as you can see, this is not decisive pullback. These green candles are decisive moves. This is indecisive. And then what happens on the next move? These are decisive moves. And we got a little bit of indecision here. But notice where the pullback occurred. Right smack dab to the T-line. Now, the one thing we try to emphasize is that the T-line is not something that everybody has on their chart. So the T-line is probably more of a natural number, like a Fibonacci type number. That's just where human nature usually brings prices back to, just because of human nature selling off to a certain extent or buying to a certain extent. BIDA is one of the ones that we've been talking about in the option trading room. This is the type of chart that if it opened weaker today, you close it out. But when you see it come back up, you can always buy it back based upon a positive open. If they open this positive tomorrow, what's it essentially telling us? That the profit taking is over and they're starting to trade it back up above the T-line. Yeah, this is kind of where, Don, we're kind of assimilating everything into the whipsaw. That should have been kind of a whipsaw illustration. That if you get closed out, one of the biggest emotional problems that we all have, and I say we all have because I had it, is if I close this out and it went down and then came back up, I sure wasn't going to buy it, because, boy, would I look stupid if I sold it here and bought it back, and then it went right back down again. Well, that would have been if you didn't have something to hang your hat on as far as a pattern to tell you the buying has stepped back in. We want to be buying it again because it's coming back up above the T line. Okay, let's see. Yeah, and there was a lot of stocks that came back and seemed to have supported off the T line today. Now JKS, still this is observe the obvious. This is what we call our little stutter step. We had buy signals, started up. Notice how indecisive it pulled back, and where did it pull back to? Right back to the 50. Did a bullish harami. Doji sandwich, broke out through this level. If this was our buy point, what was our sell point? If it closed back below the T-line, which it didn't do. What were we kind of anticipating? We're anticipating that it probably hit the bottom of the trend channel, and now it's going back up to the top of the trend channel. What did today's gap up tell us? Even though we're in an overbought condition, it pretty much told us that out of this pattern, they were getting enthusiastic to the point where they gapped it up through the resistance level. Everybody and their brother could see there was a resistance level right here, but they were buying aggressively, setting it up through, which gave us the clear indications this was not going to act as a resistance level anymore. Do you mean you intentionally use only the EMA 10, or that you can find another EMA? Now, I use the 8 exponential moving average. Now, you can use whatever you want. It's just that we've discovered over the years that the 8 exponential moving average works very efficiently for a very simple rule. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. We do, I think the video on scanning technique should be available. I don't know where it is yet. We'll have to ask Abe. Okay. Okay, let's see. Then Scotty was another one. Now, I'm kind of showing these because notice what the patterns are. These are big rounding bottoms, and notice what the market did today. It was very sluggish, yet we were in quite a few positions that were confirming the patterns. Scotty did the same thing. It gapped up. Here's your doji gap up. You're right here at this resistance level. I'd kind of be looking for this to go higher. Where? To the same magnitude move as this. This could put us up over into the $100, $105 level. Where would my stop be? I probably wouldn't want to see it come back down through the high. If it did, where is it? It's back into the trading range that we gapped out of. And when it gapped out, it told us there was a new dynamic. If they came back into the trading range, that tells me it fizzled. And James, we'll be doing stops here probably within the next couple of weeks. How to set your stops effectively, and the psychology. That's the nice thing about candlestick analysis, is there's no formulas. It's just the graphic depiction of what's going on in investor sentiment, so it's all based upon the psychology of a price move, not necessarily the price move based on fundamental analysis or that type of thing. And the reason I kind of scoff at some of these talking heads on CNBC this past week, they're trying to analyze what the market's going to do this coming year, is nobody in the world knows what the market's going to do this coming year. Nobody knew last year what the market was going to do. All we really want to do is let the market tell us what the market is doing and make our profits that way. And I just kind of, one of the commentators, I forget his name, was saying that he'd like to have his son study, I forget which fella does all the fundamental research. Fundamental research is only one cog in the wheel. If nobody perceives that there's a good reason to be buying that stock, the stock's not going to move. You can have the best fundamentals in the world. Okay, this one, Camp, also this big fry pan bottom type pattern. And notice what's happened when it got to the end of the pattern. We started seeing a lot of whipsaw, and that's not unusual when you start seeing a lot of interest coming back into the stock. This one I would definitely be buying on positive trading tomorrow. And this is one of the ones that we were recommending in the option trading room, that you could probably do a spread, and I forget which one it was, a 30-35 would probably be an effective one. Don, if one of those analysts did predict 2013 correctly, I bet you dime to donuts they didn't project 2012 correctly or 2011. So it's like the old blind pig and find an acorn every now and then. When you say market, what exactly do you refer to? Just the market in general, meaning the indexes, the Dow, the NASDAQ, and the S&P 500, the market in general. I want to know whether the market in general is moving positive, sideways, or negative. No, you don't want to do, remember, the effective use of spreads is that at the expiration date, you want to that spread, if you've bought the 30 and sold the 35s, you're hoping that trading above 35, and on that date, your spread is now going to be worth $5, the difference between the lower and the higher priced one. The further you go out, you're still going to have premiums in both of those spreads, or both of those strike prices. So as long as you're not close to your expiration date, the premiums in there are going to keep limiting your upside potential. So if you're buying a spread and you're paying $1.70 for it, and let's say it's a 30-35 spread on, let's say, January 17th or whatever expiration day is this month, if that stock is traded at 35 or higher, your spread will now have gone to $5. But your February spread still has premiums. That stock may have moved nicely and exactly what it was supposed to over the next 2 or 3 weeks, but your spread for February may still only be at $4.20 because you've got premiums in both of the strike prices. Oh, Jay, you tie first of all, you're buying the spread based upon your analysis of the chart, and secondly, see if I can flip it up here. You can do a spread, and I'm going to just do an example here. Let's say I wanted to do a 65-70 spread on Scotty for January. They'll do the price for you. They'll say you can probably get it for $1.50. Well, if I can look at this and say, my criteria for a spread obviously is I want to make at least 2.5 times my money, meaning I don't want to pay more than $2 for this spread for it to go to 5. All right, we'll do option talks here. Right now, we want to take a look at the charts. OB or OXBT. A lot of people say, I stopped out today. What really happened today was you had a downtrending stock that was getting near a support level, and it did a doji gap up. It still did a doji gap up no matter where it traded, unless it traded all the way back down to where it opened. But the fact that they did a doji and they gapped it up through the T-line, the 20 and the 50, even though it backed off, still told us one important factor. They were buying this stock aggressively. So this one, you want to still be buying aggressively if it opens positive and starts trading positive, because that tells us the profit taking from the big move today is over. The uptrend will continue. Why should the uptrend continue? Because you've just had a doji gap up, your best friend, number one. Number two, you're above the T-line. And number three, you broke out through this downtrending channel. That tells you we've got the potential of another big price move like this. We just finished the 3T, 8T, 5, 10-minute video over the weekend, so they're still sprucing it up and getting it ready for everybody. Can you make a living of just trading stocks and not options, future commodities? Sure, Cheryl. I tell people that if I could trade full-time, which someday I will when you all get tired of me and that I know that I can take whatever asset base I have at that time and trade the markets and probably make, on average, 10% return monthly. And that's without trading options, futures, or anything else. It might be margining my account, but it would be just trading stocks. And the reason for that is there's 8,700 trading entities out there in the world. I limit my trading universe down to 2,750, which is stocks greater than 5 and trading more than 200,000 shares on average for the last 90 days on a daily basis. And doing the scans, which takes less than 20 minutes each afternoon, I can find the best 2 or 3 trades for the next day, and I can do that whether the market's going up, going down, or going sideways. Yeah, I don't think there is any options on OXBT. If we were working tomorrow, can we set a buy stop just above the close? I would put a buy stop above the open. But if it came back up to today's open, you want to be a buyer. Where should I put my sell stop? I wouldn't want to see it close back down below the 50, which would put you back down into the trading channel. The reason we're buying this is because they have a doji gap up out of the downtrend above the 50. Okay, what else we got? Well, we've been holding SWIR because there's that little scoop type pattern, and notice how the scoop pattern started with a Morningstar signal. And what confirmed the signal the next day? Positive trading, which did 2 things. Number 1, it told us the T-line wasn't acting as resistance, and number 2 was confirming the Morningstar signal. Number 3, we can see that there was support right here on the 50-day moving average. That's why we use the moving averages, because we can see immediately what's going on in investor sentiment right at major support and resistance levels. At this point, we just stay long until we see a sell signal and a close back below the T-line. And right now, we're still trading above the 3 T-line, so that tells us that we're still in a strong uptrend. Let's see. Gale, we recommended last week. Oh, not Gailey. Not Gailey, Gale. Because this is obvious. There's your slow curve breakout. Notice what happened down here. Kind of a little wedge with doji, and then they told us which way they were going. When they told us which way they were going, coming out of this trading wedge, it also told us they were trading back up over the T-line. And number 2, told us that they were starting on a J-hook pattern. So if this is wave 1, wave 3 should be up here at around the 620, 640 area. And CYTR, same scenario. When they broke this out, people were getting into this with great enthusiasm. This stock went from 2.5 to 6.5 in the matter of 3 days. Then it pulled back. Where did it pull back to? Right smack dab on the T-line. We did a bullish engulfing signal, which told us that the selling had stopped. And if they were that enthusiastic after the profit taking, they're probably going to be just as enthusiastic. So you continue to hold this until you see a sell signal and a close below the T-line. Yes, you are getting pretty far from the T-line, but remember, the T-line and the 3T are still in an uptrend. You're not significantly away. And what's our target? Well, if we can calculate this was wave 1, our target should be up here off the screen somewhere in probably about the $8 range. That's worrisome, but right now your stochastics aren't telling you you're in the overbought area like you were over here. That just tells me there's more upside. Joe, I'll get to all these as soon as we get done with the ones that, and we're not even halfway done. You guys are going to be up all night long. Whoops. IPGP, this is the reason why you want to know when to buy and when to sell. This looked like it was doing a J-hook pattern, and then you have the flutter kicker to the downside. There's a bullish candle. The next day they gap it down to a doji, and then they go in the direction of how they open it after a doji. Tells you that flutter kicker. If you took out this little doji, you'd have a kicker signal to the downside. This one should be closed out. It should have been closed out, whether you're in the calls or the stock itself. CSIQ. Wave 1, wave 2. Whenever you see a big breakout like this, remember what this indicates. It indicates a strong change of investor sentiment, and usually you're going to see a move after that. So we've got a wave 1, wave 2, starting wave 3. Probably going to see a 45-degree come off of here for quite a while. We also recommended QUIK. This is the nice thing about patterns, is despite what the market in general is doing, a pattern has built-in information that when they came out of this fry pan bottom, when we started buying it, it just started moving, because where did it start moving? Through this level. Now, as we go through this, remember, we're looking for the buy signal in the oversold area. But patterns are usually going to be enthusiastic once they've gotten up to the overbought condition. So you use the stochastics for buying the signals in the oversold area, but you also have to be aware that patterns will usually be overbought by the time they start breaking out. And as you can see, this has not had any, the market has not had any influence on this pattern. This is why identifying the signals and patterns will put the probabilities in your favor, whether the market's moving up or moving down. MACK was another one that we recommended not too long ago, because this is the typical. This one had a very nice look at when it came up and hit the resistance level. Notice the pullback. Pullback very indecisive, and then they took it through. Where do you think our next target was? The 50-day moving average. It looked like it was selling off, except they gapped through the 50-day moving average, creating kind of this scoop pattern. There's your flat handle. There's your scoop. And what do we expect coming out of a scoop pattern? A good, strong slingshot effect. Hit the 50 or the 200-day moving average. It was time to take profits on weakness. But notice what happened right down here, right back to the T-line. Bullish engulfing. If it came back up through the 200 the second time, what type of pattern was setting up? A J-hook pattern. So this is all just visually identifying what normally happens in investor sentiment. Now you don't know whether it's going to pull back. I wouldn't think it's going to pull back until we complete wave 3. And right now we haven't seen a sell signal confirmed. Now I might use today's low as my stop. If it came back down through there after a doji, that was a good indication they're probably coming back to the T-line. But as of right now, there's nothing to tell us that this uptrend isn't still in progress. QTWW also came out of this kind of little wedge formation, did a little scoop type pattern, now doing a J-hook pattern. However, it's getting soggy in here. So this is another aspect of candlestick analysis. It tells you when to get in. It tells you when things have fizzled. If this opened weaker tomorrow, I'd close out the position immediately, because what should this J-hook pattern be doing? It should be going in this direction. If it started moving this way, it's just telling us that we might be now caught in this kind of sideways, slow upward trend. ENT. Well, for crying out loud, we had something better to look at than this. I don't know if that's the right one. S.ENT. That is. Well, maybe not. For some reason, this is a better looking chart some ways or else. BBRY. This is where you observe the obvious. The obvious is when they broke this out, coming out of this fry pan bottom, notice where they haven't been able to take it. Below the T-line, you continue to hold this until you see a sell signal. How many waves can you expect from a new move? Oh, I don't know. I don't care. I'm looking to buy or sell based upon the signals, not the waves. The waves just kind of give me a count of where the next top or bottom might be. And then I'll look to see what the signals are telling me at that level. We're not trading Elliott Wave. We're not trading waves. We're just trading based on prices do move in waves. I just want to see what the next trade upside potential is. Facebook, fry pan bottom, J-hook. This is what you call the classic. What do you expect coming out of a fry pan bottom? A strong price move. What do you have for a prerequisite for a J-hook? A strong price move. So it's not uncommon to see a fry pan bottom, strong price move, pull back. Now you have a left-right combo, bullish engulfing. You want to be buying this one on positive trading because where are they going to take it to? First, they're going to take it right back up here to the trend trajectory and probably continue the uptrend. And let me see what else we got. Oh, ETE was another one that had acted well, but now should be closed. It had a potential of doing a J-hook because notice how it pulled back indecisively with the anticipation that we should be moving up. But the fact that we did a left-right combo to the bearish side told us we should be out of this one with it closing below the T-line. Remember, anytime something closes below the T-line, the probabilities are pretty great that it's in a downtrend. And the worst case scenario is if you've got something that just closes below the T-line, worst case is that if it opens positive and trades positive the next day, you can always buy back. I always illustrate that if there's a 10-point move and I only catch 7.5 points of it, but every time I'm in, it's because I know the trend is up, and every time I get out, it's because it looks like the trend might be over. That doesn't bother me. I'm more interested in being correct and making less money more times because the compounding effect is that much greater than holding on to something where I'm giving back some of my profits and have to make it up on the next trade. Tammy, yes, it is hard, but through the years I've discovered every time something moved back to the T-line and looked bad, I had one simple rule. I made a lot more money just by having it confirmed that it's closing below the T-line. A kicker type signal. That's usually a powerful signal. Next day they open up positive. A bearish engulfing signal closes right below the T-line. That's a sell signal in the overbought condition. What do I need to tell me that there's a change of investor sentiment? A sell signal and a close below the T-line. So, yes, that's part of the emotional trauma of investing, is figuring out how you get rid of that that emotional fear factor. And I've lost it just by using the T-line. There's so many days I say, man, this looks bad. Maybe my uptrend's over. But it's not over until you see a sell signal and a close below the T-line. I can sleep a lot easier. Yes, I would put if you couldn't watch it, what was the low today? 91.61. I might put my stop at 91.20. But if it came down through that level, I want to close out the position. No, not right at the T-line. Remember, right at the T-line can still be a little bit of indecisiveness right up and down below it. I want to see that it's moved down, and so if it moved down below the low, that would tell me it's probably moving in that direction. Now, again, that's kind of a subjective situation. The less time you can spend watching the trades, the more you're going to have to, for the crying out loud. SBLK is always a good chart. It just won't come up on this chart service for some reason. PKD, notice where it bottomed out right here with a hammer signal, doji, bullish confirmation right off the 50. So what are we looking for? Positive trading, which would take us through this level, which essentially tells us, notice how this uptrend started with a doji gap up, your best friend. If you closed out here, you bought right back on the kicker signal. And right now, we're not in the overbought condition, and we're pushing into the breakout level. I'd be watching this. Or if I couldn't be around to watch this tomorrow, I'd put a buy stop above today's high. If it comes up through there, it's breaking out. Okay, James. James, this is information that you're not getting from a sage. This is information that I spent years trying to fight my own emotional problems, trying to trade effectively. So everything that you're seeing is because, fortunately for you all, I was the worst investor in the world, and I was even a stockbroker for 8 years. And when candlesticks came along, just the common sense elements of candlesticks just turned me around 180 degrees. MRVL, there's that big move. We're right at the breakout level. If this opens positive, we're in wave 3. And what do we use? At this point, because we are a little bit away from the T-line, I'd use a close below the halfway point of this candle. Why is that? Because this is telling me the bulls are getting into control, moving out of here. And if they opened it and closed halfway down this candle, where are we? We're back in this trend area. We didn't break out. We want to close out the position. I never say never, Goofy. I always said I would never marry a girl that would want me as her husband. But I did anyways. Oops, deck. Deck, you want to be buying this one. If this opens positive, notice our fry pan bottom and notice where your dimple is, about halfway. Fry pan bottom usually has a dimple. You can kind of measure that from here to here is going to be equivalent from here to here. So if we're breaking out tomorrow, what are we in? Probably wave 3. Notice how this one's starting with a slow curve. The slow curve is your best trading friend also. When they whip out of a slow curve, the slingshot effect is usually fairly strong. That would put you into wave 3. On DDD, no. Volume doesn't mean a hill of beans. A lot of people say, I want to see the volume going up when the stock going up. Volume means absolutely nothing. If nobody's willing to sell you a stock, that stock's going to go up strong on low volume. The only time I pay attention to volume is, say, on a day like today with stochastics bottoming out. I don't think I have volume on here. But if you saw a big volume spike, that pretty much tells you there's been a lot of stock changing hands. It's usually the weak selling into the strong. ISMO. Bullish trades. Now you've got that little flutter kicker above the T-line breaking out through this level. Another wave 1, wave 2, and where did it bounce? Right off the 50. Where is it breaking out? Through the T-line and this downtrending channel. This is probably a very good case for the watching wave 3 setup. And Nuva. Same scenario. Right smack dab to the 50. The tails to the downside tell you the bears tried to knock it down. The bulls stepped in. Now they've gapped it up off the T-line after kind of a spinning top hammer signal. And where did they gap it up? They gapped it up above the T-line, number 1, and number 2 out through this resistance level. Now we've got wave 1, wave 2, going into wave 3. And, all right, so the slow curve is pretty much a very strong price move. Anytime you see this slow curve, look for the reaction here. And this slow curve, if you're trading options, this is where you want to be buying your options because one or two things are going to happen. You're either going to break out big or you're going to fizzle. And so for every time you fizzle, more than likely you've had 2 or 3 times where you've broken out big. It's just a very high profit trade setup. I never set a stop below my entry price. Day trade or swing trade. I can always buy it back. Maverick, that's not a bad strategy. If it comes back down through where you bought it, you can always take a look at the chart again and see what you should be doing. Is volume important in your trading? Only in the respect that I want to be able to get in and out of a position immediately. I don't want to try to sell a stock and then have to wait around 15 minutes for it to execute before I can go on to my next trade. HZNP, there's that slow curve breakout. So this is where you observe the obvious. The obvious is that you're in an uptrend. The obvious is they're not closing it below the T line. You stay long. We've still got some positions that are acting very well. Man, oh man, it's 9 o'clock. I've just babbled on here for hours, haven't I? There's that cradle type pattern, fry pan bottom. All you can do in HM or HIMX, which we're doing, is holding until you see a sell signal and a close back below the T line. And who wrote that? Terrible handwriting. ZLVS. Another one that's just about ready to break out through this level. If this breaks out, we're probably going to pop up and fill this gap over here. Kind of that slow, well, that's not quite a slow curve, but all right, the J-hook patterns also are very high profit trade setups. When you see a strong price move and it pulls back and you can see it setting up, you're going to have another strong price move. Pulls up, pulls back. So this is where you start taking profits. This is where you buy back. I don't mind closing out here and buying back here, knowing that I'm not holding something that might go this way. But when I see the pattern setting up again, I can always get back in. Let's see. I think this is what I wrote down. There's a J-hook pattern in the making. A left-right combo. This one you can be buying on positive trading. What's your target? You just calculate that if it moved from 26 to 34, that it could probably move from this area to the $40 range. X. Whoops, did I type too much? XOOM. There's that J-hook pattern, and notice what it did. It hit the 50, pulled back very indecisively. Makes this very simple. If they open this positive, what's it telling us? Telling us this signal's working, this pattern's working, and the 50-day moving average isn't acting as resistance, and this downtrending channel isn't acting as resistance. Have the possibility of a good, strong breakout from here. And let's see, is this Unisys? S.USI. Another J-hook pattern. Here's your big fry pan bottom. This is your classic. A strong price move. Notice how it pulled back indecisively. This makes it very simple. If they open this positive, you want to be a buyer. And where's your stop? It shouldn't close back below the T line. All right, and the scoop type pattern, that's ALL, American Airlines. Notice the little scoop, and where's the scoop occurring? Right in the middle of this uptrend. That tells us we probably have more upside. Are you saying PVA has a scoop pattern? Yeah, a little scoop type pattern with a doji gap up, your best friend. You can be buying this one on positive trading. Where do you think your target is? There's your trajectory. There's the pullback. Now they'll take it up very quickly right back into the trajectory of the trend. Okay. That's about all I've got for tonight. Are there any questions? Not individual stock questions. You're going to have to retype them as soon as I tell Jim to do the double line. Any questions? What's the difference between a simple and exponential? Simple moving averages are taking the average of the opens and closes all the way back, whereas exponential, they put more weight on the current open and closes than they do on further back. What is this charting package? This charting package is a CQG. This is kind of the grandfather of the charting services. A lot of the charting services get their feed off of CQG. I started using it probably 15 years ago. unfortunately, it's approximately $1,000 a month to use it. The reason I use it is because when I'm writing articles or books, it's got very good graphics. But you now have just as good graphics and good information on Metastock and Thinkorswim. All the other charting services are just about as good now for no cost. The setting on my stochastics are 1233, and that's not anything set in stone. And just through the years, I've tweaked it to where 1233 seems to work. If you see a close under the T line without a previous sell signal? Then you just wait to see. Since you don't have a sell signal, it usually just means you've got to pull back in an uptrend. How do you determine the size of your position? We do that in our money management sessions. All my sizes are exactly the same because the biggest bugaboo we have in our investing is our emotions. So if I put 200,000, not 200,000, let's say I've got a $1 million account and I've got 10 positions on, I want them to be all $100,000 positions. As soon as I decide that I like a stock much better than the rest of them, and I decide I'm going to put 200,000 into that position, you can bet your dime to donuts that you'll spend 90% of your time watching that one and not the rest of them. Then, if it doesn't do what it's supposed to, you're going to say to yourself, or I would say to myself, I'm going to give it an extra day until everybody else sees what I saw in it. And when it doesn't do that, I've closed it out 2 or 3 days later than I should. So instead of closing out one of the units of my portfolio, I'm closing out what I thought was a great trade, and I've put my emotion into it. So I keep all my positions equal dollar amount. Can you give a list of general scan settings? Bayou, I use my universe, which is stocks greater than 5, average 200,000 shares a day. That's my universe. I want to trade everything that has a good chart. And then I sort them by which ones have had the biggest percent price move today. I'll either find doji gap ups, I'll find kicker signals, I'll find fry pan bottom breakouts. That's just real quick. We'll do another. I think there's a scanning video coming out that I just finished up over the weekend. Do you ever add more shares to your existing positions? No. Once I put the position on, I watch that position because I don't know. I'm not smart enough, and nobody's smart enough to know whether that position is going to do any better than any other position. When it gets to the time to sell it, I sell that unit and I move on to another one. If you keep all your trades at equal dollar amounts, your emotional decisions will disappear dramatically. Carol, I think they just started marketing it or getting it out to people in just the last couple of weeks. Metastock has all that information right now. When you say if a stock opens positive, do you wait for 5 minutes to look positive? What time frame? If I'm looking at this to buy positive tomorrow, first of all, I don't want to wake up and see the pre-market futures are down 80 points on the Dow. That means there's not a bunch of sellers or buyers around. Number two, I don't want to see this opening down here. That tells me the bulls aren't there. I want to see it kind of opening somewhere in here, and I want to see that the market is still moving in the direction that we think it is. If it opens slightly lower, then our simple entry strategy is we put a buy stop, or we get ready to buy it if it comes back up through the previous day's close, because that pretty much tells us that they were profit taking on the open and the bulls were still there. And that may take 2 minutes, that may take 20 minutes, that may take 45 minutes, anywhere in between. What is the best way to learn your trading style quickly? Oh, I would ask everybody else in here what that is, but I would suggest buying high profit candlestick patterns. And people are here on the 1 week free. You might try the chat room for 90 days. Worst case scenario is you find out it's not for you, but our modus operandi is I try to give you more information than you'll ever expect, because I went through years of just wishing there was somebody out there I could talk to tell me how to trade correctly. And I wanted to be a good investor, and I got out of the business. I got out of the brokerage business because I realized Wall Street had no more idea what was going up than anybody else. When candlesticks came along, it was just common sense put into a graphic depiction. You're giving away a classic car every 2 or 3 years to your charting. So you're absolutely right, TR. I've known that for a while. I've just like teaching an old dog new tricks. Fortunately, I make enough money with my trading that $1,000 a month doesn't bother me for a charting service. What's the difference between a slow curve and a fry pan bottom? A fry pan bottom. Which ones were fry pan bottoms? Can't even think of. Anyways, to answer that question quickly, this is a slow curve. It's usually in the top of a trend. A fry pan bottom is usually at the bottom of a trend, bottoming out like this and coming back up. And the definition doesn't really make that big a difference. As long as you can see the trajectory is that they were selling, they were flat, they're starting to come back up, and the enthusiasm is starting back into that trade. Ed, yes, I have different accounts that some are long-term investors, some are swing traders, and myself, I've got small trading accounts. And I didn't even think of it. Somebody asked the other day, what's your rate of return, or what type of return do you get out of your trading account? And I don't really know, because if I see, like the last car I saw, which was a 1952 Cadillac, and they were asking, I think, $8,500 for it, I just traded for extra heavy for a few more days and made the money, took it out, and went and bought the car. So I usually calculate my return based upon how many cars I want to buy during the year. Yes, you can purchase anything on the website. If you go to the candlestickforum.com website, just click products and services at the top. There's like 40 or 50 different training videos. But we just did a moving average training just a few weeks ago. And that's the type of thing we'll do every few months. How much capital do you recommend to start trading? Mike, that's up to each individual. Whatever you're comfortable with. If you see a close under the T-line without a previous sell signal, do you sell and enter the higher buy stop, or just wait for the stock to turn up? If I see a close below the T-line without a sell signal, I'll give it to the next day. I better see it open positive, though, and trade positive. If it opens lower, I'll close out the position with the worst case scenario, knowing that I'm going to be prepared that if it turns right around and comes back up above the T-line, I'm going to buy it right back again. Yes, there are beginning option courses or trainings. And the beginning option trainings are very simple. But unfortunately, everything else I teach in here is very simple, because I'm not sophisticated enough to figure out. I try to, through the years, I've just been trying to make things as simple as possible, because I don't want to spend all day after the hours or trading hours spending my time looking to see what to do the next day. All right, thanks, Lee. Yes, and that's what I did. And another thing I tell people is you don't have to take my word for it that indicators work. Put them on your chart and then go back and see what they do. This is the nice thing about visual analysis with candlesticks is everything is common sense and everything is right there in front of you telling you whether it works or not. If you're interested in the option training area, just email Abraham@candlestickforum.com. And he'll get the information to you. The reason we aren't pushing it is we didn't set up this service to provide another service that we could bring in bunches of money for. It was because the people in the main chat room that were still just trying to learn the signals and how to invest and get through their own emotional faux didn't want to hear about option trading because they weren't interested in it. So instead of taking time away, we just set up a option trading room. It's a one-time payment, an annual payment. And it's not anything we're going to hold anybody's feet to the fire. If after 30 days you don't like what you see, you say, I don't want my money back, and we send you your money back. Find somebody in a simpler strategy you really understand and go with him or her. Yep, it's okay. These talk demos of patterns imprint the successful patterns. Pay attention. Okay, thanks, Roger. You feel very comfortable listening to me over and over. Wish you'd tell Sandy that. She never listens to me at all. Are you saying that if you've opened a position that you ignore subsequent doji, gap up, spool doji, sandwiches, and bullish kickers, or just stay with your... No. At the end of the day, I've got 10 positions on. And let's say, for example, I get to the end of the day, and I have a position that looks like this, and then I have another position out there that looks like this. I'm going to say, all right, I want to close out ARWR if it opens weaker, and I'm going to be buying this one. Or even if I have something that looks okay, that's the nice thing about being able to scan for signals, because I've got more good trade setups than I can handle. So if I've got an iffy position in my portfolio, the rationale is, why stay with an iffy position when you've got something where the risk and reward is much greater? Let's see, I have a 82. The last one I bought was a 52. I usually stay with the older cars. But Trade Tricks might send me some pictures. I find too many indicators confuse me because they are always never all confirming. I use one indicator, and that's what is my signal telling me. Then I start adding the few other indicators that confirm. How do you avoid getting whipsawed when the T-line is sideways? Gil, if the T-line is sideways, that's telling you that trade is sideways. Get out of the trade and go on to something where you can recognize you've got a trend to it. List your chart settings, 200, 50, 20 simple moving averages. The T-line is the 8 exponential, the 3T is the 3 exponential, and the stochastics are 12, 3, 3. So you don't track your trades. I don't know why. I don't understand. Yeah, I track my trades. I watch them every day. You don't track your, I don't track my trading in the sense that, I don't care how, I just want to know that every time I put on a trade, I'm going to have probabilities of making money. So, I don't track to see that I've made 62% over the last 6 months or 31% or whatever. I'm just trading to make money. We don't know. I don't know how to make the font bigger on these symbols. That's why I usually try to mention the symbol when I bring it up. Is $9.99 too high for one side of a trade? Cheryl, that's a question that you ask the chat room. Let other people tell you what trading services they're using, and see which ones are the best. You are very gracious to answer all these questions, newbies, but they are the same questions every time, aren't they? Joe, yes, but I discovered years ago that I would show the same charts. They were updated. I would show the same presentations, and I'd have people come back 4, 5, 6, 7, 8, 10 times to a presentation, and I would start asking, why the heck do you come and watch these if you've seen it so many times? And the answer was, every time I listen, I have something else click. The more I see it, the more it clicks in my mind. So a lot of these questions that people are asking, I will answer them, because even though somebody else has heard it 3 or 4 times out there, it hasn't quite sunk in yet. Oh, okay. I probably moved my cursor way too fast. Yes, Sam, in our members area, we have stock picks every night. I put out 2 or 3 picks every night, not so that you have picks, but so that you can see what the rationale and what the indicators were, what the pattern was. So it's still a continuing learning process. But the lack of money management baffles me. Sean, you can do whatever money management is good for you. I know that my FUPA in trading is my own emotions, and I've tried to set everything up where I can keep as much emotions out of my trades as possible. All right. Thank you, Oogie Boogie. See, the price has gone up on that stock the past week or so, but the stochastics during that period are down. Does that divergence foretell anything? Which one is this? Which one, Bill? This one that we're looking at? Daniel, hold on. We'll get to all the individual. Yes. As you can see, it's up in the overbought area, and the stochastics started heading down here, but as you can see, they're slowing down in their downtrend. So, yeah, even though they haven't turned up, there isn't too much room for them to turn up to. So, remember, we're not buying stochastics. We're buying the signals and the patterns. Are the daily picks the same ones you personally buy each day, or do you buy different stocks? No. If I put out 3 daily picks, if I have room to buy them, I'll buy them. But I don't necessarily buy every one of my daily picks, because if I'm putting out 2 or 3 a day and I've only got 10 positions on, obviously after 3 days, those are all the picks I could be in. So the reason you have picks every day is, let's say you're coming out of trade number 1 and you need someplace to go, there's 3 more picks to look at. Okay, let's see. You talk about the move back to trend and target to top of channel. Do you ever include trend line and channel bottom as a sell? Yes. Let's see. I think even back here, let me see if I can do this correctly. When we were analyzing the market a while back, it may have been right in here. I mean, we can see that we were in a trend channel. So there's lots of times where I can see a trend channel, and that's not a great one, but we're still in an uptrend. Yeah, I'll sell at the top and I'll buy at the bottom. The reason is because I can see that there's a sell signal at the top and there's a buy signal at the bottom. Okay. Did Abraham already post a link where tonight's recording will be available? No, Donna, that's Jim will usually get that ready, send it to us, and if it's not on tonight, Jim, let's see, I forget what and then Abe will get it up. If it's not up tonight, it's up tomorrow. How are you taxed as a trader? I put it all under the business, that it's part of my business. Okay, with that, Jim, go ahead and do the double line. And in 3.8 seconds, do another double line so we can stop the scrolling. Oops, I can't even stop the scrolling. Let's see. Somebody had a question up here. Now I've lost it. Something about the blue line. Stochastics, anything. Okay, is the lighter dash thinner black line the 20? This one right here is the 20. It's a light gray. This line right here is the T line. Okay. Oh, man, they started way before you put the double line on there. All right, let's start up here. YELP. Yelp can be bought. Notice how it's broken out through this downtrending channel. Notice your Morningstar signal. If you see a trend and a Morningstar signal, that usually means there's a slingshot effect just about ready to go in. S.FRM. This one you stay long. Notice how it's broken out. So you're essentially probably in now wave 3. So if this is wave 1, and notice where this uptrend ended. Whenever you see a gap up in the overbought condition, start getting ready to take profits. Also notice how far away you moved from the T-line. It was probably coming back to test the T-line. Now you're back up through the top, which means you're probably now starting into wave 3. Eagle backed off today. It needs to open positive and trade positive tomorrow. Let's make this big enough where we can see it. It better open positive, telling us it was supporting on the 50, and this was a wave 1, wave 2, now starting wave 3. FTEX didn't get going today. Now, this is a case where if you bought it on positive trading and it came back right here to the T-line area, this better open positive and trade positive. If it opens lower tomorrow, close out the position. You can always buy it back. So a lot of people say, well, shoot, that's a bad trade. Got to remember, every time you put on a trade, the probabilities of being in the right direction at the right time is greatly in your favor. But that's probabilities, not a guarantee. So I know every time I put on a trade, I've got probably a 67, 70% chance that I'm going to be in a positive trade, which sounds pretty good. But also you have to realize that means 33% of the time, or 1/3 of the time, you're going to be in a negative trade. So the process of successful investing is knowing what to do in a good trade and also knowing what to do to get out of a bad trade. And I always use the example that in the last 40 years, every time I hear money managers, I've heard hundreds of money managers say, cut your losses short, let your profits run. But I've never seen a single one of them tell you how you cut your losses short and let your profits run. Candlestick analysis does that pretty well for you. You can find spots where if your buy signal, hey, I'm talking here and I'm forgetting what I'm doing. Hertz, this one, after the shooting star, and notice how far away you are from the T-line. And it closed right on the 3T. This one better open positive and trade positive to stay in it. If it opens lower, obviously it's coming back down to the T-line, take profits, and get back in if it bounces up off the T-line. SUNE. This one you stay long as it stays above the T-line as well as the 3T line. Let's see. Oh, I forgot to add for you new folks. Not only do you get a lot of information, but the jokes in here are just splendid. You'll love them. KRO, notice what it's done. It's done a bearish doji sandwich. If it opens lower, you're probably coming down to the T-line. Probably. You don't know whether they're going to take it all the way down here. If it opens lower, I'd close out the position. And then, if it hits the T-line and comes back up, you just buy it back as it comes up where it opened. Let's see. BONT. BONT, I was telling yesterday, this usually has chart patterns that are very predictable. But as we saw today, this one opened positive, but if you bought it, it should have been closed out with a close back below the T-line, which now tells me more than likely they're going to bring it down to the 200 and the 50 and then get ready for a buy signal from there. First Solar, that's a kicker signal to the downside. Oh, maybe it's not. I'm colorblind slightly. No, it failed at this is what we call blue ice failure. Came down, failed at the support level, and that's where they've fallen through the ice. This was kind of illustrated by my late friend Dave Elliott of Wall Street Teachers. Kind of described it as somebody falling through the ice. They can't find the hole they fell through. They drowned. Where are they going? They're going down here. This one you want to be short. Watch for it to go to the 200. Let's see, RPRX. This one's very simple. You're in an uptrend. You're right up here at the breakout level with a doji. If it opens positive tomorrow, you're breaking out into new territory, number one. And number two, you've got the prospect of a doji sandwich. Means if they start taking this up positive, notice where it kind of will be trading up here in the gap area. You got a potential of moving all the way up here to fill the gap. Oops, what has happened here? Somebody's LNG. LNG, I wouldn't be too enthusiastic about it. You can see what it's doing. It's in a slow, steady uptrend, and that's the characteristic of it. It's a slow, steady uptrend. PSX, same scenario. This is what you call a steady eddy. As long as it stays above the T-line, you just hang on to it. This way you can sleep at night. Even when you have a potential sell signal, as long as it doesn't close below the T-line, you stay with it. The longer a trend stays above the T-line, the more compelling the sell signal needs to be, because it's like any other investor sentiment. You've got to change it, and it's going to take something big to change it. SMEGMO, when it had this hammer signal right on the T-line, it told us it better open positive and trade positive. The fact that they closed it back down through the T-line tells you that you should have closed out the position. They weren't taking it up. This one should be closed out. You can be going short on this one with a prospect of coming back down to the 50-day moving average. Let's see, this Kroger. Look at the slow curve. It's going down. Stay short. As you can see, once they started this in a downtrend, there's your evening star signal. They couldn't get it back up above the T-line. All you do is stay short until you see a buy signal, but I would probably, everybody's waiting to see what it does once it gets to the 200-day moving average. And S.MOTR. Well, IMMR. Or MOTR didn't seem to work for some reason. IMMR, this one just barely above. You don't really have a real clean buy signal down here. You need to see something strong to tell you the bulls have taken control. It's not there yet. ROSL, this one you stay long until you see a sell signal. At this point, I wouldn't want to see it close back below this level because that'd bring you down below the 3T. But as of right now, you're not in the overbought area anymore. Stay long as it stays above the 3T at this point. GTAT. This one, you stay long as it stays above the T-line. As a matter of fact, this one, after a left-right combo, you probably pretty much want to see this open positive and trade positive. Condo, stay long. That's a nice big fry pan bottom, and if they break out above this level, got lots of running room. This is going to have a big percent move to the upside. Let's see, did we do XLMA? I think that was one of the ones. Yeah, this one you want to be buying on positive trading, and we did FTX. AFOP, if this opens positive and comes up through the 50, you want to buy immediately. And ARCW, I was supposed to illustrate this. This is why when you see it close below the T-line, you close out the position, because the probabilities are so much greater that you're going to stay in a downtrend or head down with a close below the T-line. Whereas this one probably going, by the time you get to the oversold area, you're probably back to the 50. Then you can watch to see if it's time to buy again. And I say you see what it's time to buy, see if you get a buy signal. There's kind of that scoop fry pan bottom, and notice how they broke out. They gapped up, took it through, now gapping up again. Notice where the enthusiasm is at the end of this level. So if you're trying to time a trade, you buy just as it's breaking out. Because if they break it out, that tells you this resistance level is not acting as resistance. That somebody's in there buying enthusiastically. CALI, another one that you can be buying if it opens positive and starts trading positive tomorrow also. This one you don't want to see close back below the T line. CRM, this one, get ready to short if it opens weaker tomorrow. That tells you you're caught in this trend channel, which means you could be coming back down into this area. And Ford. Oh, what happened there? S.Ford. Ford, you can be buying this one on positive trading as long as it stays above the T line. Just watch what it does once it gets to the 50. But notice you got kind of a flat handle, scoop type setup. Nally. At least Nally pays a 15% dividend. This one you want to get ready to be buying. I wouldn't be afraid to be buying right now for the longer term hold because you're getting a 14 or 15% dividend yield on this one. And Tweeter still stayed above the T line. It got scary today, but this is the exact reason why you buy on a candlestick buy signal and you can't sell on a candlestick sell signal. And the sell today didn't occur because he still closed up above the T line. TSO, I wouldn't be long or short. Somebody was asking, what do you do if it's trading up and down above the T line? Well, you can see it's not going anywhere. You shouldn't be trading this one. This is the type of trend you want to be trading. So that's to say, when you can analyze it, if stock's not moving, get out of it. Move on to something that's trading. Potash, getting a little bit soft, but this one, there's your doji right on the T line. Very simple. This one's going to move in the direction of how they open it tomorrow. If it opens lower, you close out the position. ARIA, another doji right on the T line. This one has to open positive to stay in it. If it opens lower, you close out the position immediately. Crocs did close right here at the 3T after doing a little hanging man. Now, this could be at a 45 degree, but if it is, it better open positive and trade positive. If it opens lower, you close out the position because more than likely they're going to come back and test the T line. Let's see, we did Eagle, ACW. That's a little morning star signal. This one you can be buying. Just make sure it breaks through this trend channel. If it does, you're heading for the 200-day moving average. AGEN. Another one that did a doji sandwich today. Bullish trade, a doji. Bullish trade. That tells you there's more upside. You continue to buy using the T-line as your stop. ICLD got sluggish today, but it's still above the T-line. You still had this slow curve breakout. You still are staying above the T-line. You stay with it as long as it doesn't close back below the T-line. Now, another reason I have 10 positions on is because there's some trades that are going to get sluggish for a day or two, and I don't have to worry about them because more than likely the other trades have a high probability they're moving in the right direction. So that keeps me from getting antsy if I've got 1, 2, or 3 trades that are not doing anything today or tomorrow. The other ones are acting well until those trades start picking up steam again. HCLP, another one that has to open positive and trade positive to stay in it. Otherwise, if it opens lower, you close it out. We did QTWW. This one also has to open positive and trade positive to stay in it. CCXI, this one you buy on positive trading because you've got a huge fry pan bottom. And if they get back up here, what's the resistance level? Nothing, probably until you get up toward the 200-day moving average. So as you can see, a fry pan bottom is at the bottom of a trend, and you couldn't trade this worthwhile, worth a hill of beans, until you start breaking out to the other side. Worst case scenario is it could move from here even up to here. It's still going to be a 8-10% move just to see if it's going to break out. MDT. MDT, gap up from a doji, gap up again through this level, wave 1, wave 2, now you're in wave 3. You stay with this until you see a sell signal. GTXI, another one that's got that slow curve. Make sure your volume is good on these $2 stocks. Probably on a $2 stock, you probably want to see 5, 7, 800,000 shares traded so you don't get stuck in one. But I wouldn't be afraid to be buying this one on positive trading tomorrow. And STXS, another J-hook type pattern setup with a doji sandwich through the T-line. This one you can be buying on positive trading. KCG. Notice what you had here. Hammer, 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 all supporting at the same level, right on the 20. Now what did they tell us? Let's see if we make this big enough, we can see what they were telling us. They were telling us that this level right here was not acting as resistance anymore. You have a J-hook pattern. Another wave 1, wave 2, wave 3 setup. That's a good looking chart. Let's see. ONVO needs to open positive and trade positive tomorrow. Stay in it. GST. This one should have been closed out today. You're in an uptrend, but you might be coming back to the bottom of this trend, which brings you down to the 20. So with it closing lower after a doji, I told you that's the direction they were taking it. I'd close out this position. You can always buy it back on the next buy signal that takes you back up above the T-line. Abercrombie Fitch. This one's still in a slow downtrend. I probably wouldn't be long or short. We were short this for a while until it did the buy signal. But right now, it's probably moving too slow and probably starting to go sideways to want to be long or short. GDX. This one is in a slow uptrend, but it still has to break this downtrending channel. And today's doji gives you a good opportunity to have it analyze which way it's going to go. It's going to move in the direction how they open it tomorrow. Crude oil is still heading down. Let's see, is Vanda a symbol? I don't know what Vanda is. Is it VNDA? This did a left-right combo. Notice you had doji, doji, bearish engulfing. If this opens lower, you close out the position also. Let's see, CAVM. Stay short till you see a buy signal. Notice kind of your flutter kicker when it came back up and tested the 200. And BWEN had a good chart here for the last few days. Kind of that J-hook pattern. Still nothing here to tell us that there's any sell. But I wouldn't want to see it close back below the T-line. As long as it stays above the T-line, you stay with this one. Rite Aid had a good looking chart for the last few days. Doji gap up. This one you get ready to buy. I would put a buy stop at today's open. Let's see. If this comes back up through this level, this doji gap up is still in effect. Let's see, that was RAD. Are we all the way down to RAD? Oh, we do see a VM. Yeah. How did I get there? Angie's lists. This one doesn't have any signals one way or the other. I wouldn't be long or short this one right now. That's not a chart that has any indication one way or the other. And Alta, this one you can be going short. As you can see, it's failing. If this is wave 1, and they've failed. Wave 3 could be another substantial drop. JCPenney, also moving sideways. I wouldn't be long or short this one right now until you see something move one way or the other. But as you can see, there's no direction to it. It did come up through the 50. Now it's not telling us what it wants to do. Is just kind of hugging the 50. ARTX. This one you buy on positive trading, provided the volume is good, but that's a good J-hook pattern setup. And BALT. Another one where you can stay long. There's your fry pan bottom. There's kind of your J-hook. This one you stay long as it stays above the T-line. Citigroup. Whoops. Citigroup. This one, if it opens positive, you're going to have a doji sandwich breaking you out into new territory. And as you can see, you have a nice trend channel to the upside. So your next target would be the top of this trend channel up here someplace. And ATI, whoops, S.ATI. Stay long as it stays up above the T-line. Looks like a little J-hook pattern getting ready to set up. Krispy Kreme. Well, that's not Krispy Kreme, is it? Another one, you stay long as long as it stays in this uptrend. We did LNG, RGR. This one, if it opens positive tomorrow, you buy immediately. Tells you the profit taking's over and your fry pan bottom is still in effect. On Quick, right now, if you're in the overbought condition and they're gapping it up, you put your sell stop at today's open. If it comes back down through there, the sellers have taken control. Let's see, we did WB or BWN, me. Oh, we did that one. Okay, sugar. Sugar, you short on weakness tomorrow because you're going to have a bearish doji sandwich and starting a bearish J-hook pattern. Let's see, I think we did your Yelp, MCHX. This one you could be buying. The bigger this signal, the more compelling it is. And what they're going to do here is bring this right back up into the trend channel and then continue to positive from there, 45 degree. ZLCS. Uh-oh, did I do that wrong? I might have. We'll have to come back to that one. CLF. Uh-oh. Oh, man, it's already getting on toward 10 o'clock. ZLCF, if this opens lower tomorrow, you short it, it's going to the 200. DJI, another one you can short. Notice the rounding top. If this opens lower tomorrow, they're bringing it back to the 50. And MCP, whoops, S.MCP, they're going to bring this back down to the T-line. So today, with it trading lower, you should have closed out the position. Watch what it does once it gets to the T-line. If it bounces back up and comes back up to through the 200, that's when you buy it back again. Nutrisystems, go short on this one. There's that evening star signal, pushing it down, probably the 200 again is your next target. And NIDH, this one you can stay long, but I'd be more apt to buy it at $3, knowing it got up through the 50-day moving average. PRKR. Another doji sandwich, slow curve. If this opens positive, you want to be buying immediately. You've got the slow curve and a doji sandwich potential. which means your next target is probably back up testing the recent highs. Nike. At best, you want to short this one. You don't want to be long in this one anymore. It's run out of steam. Let's see, we did Las Vegas Sands. Another one that you can go short on weakness. And WETF. This one's getting a little bit toppy. If this opens weaker tomorrow after the dark cloud today, after you've got some sell signals, bearish engulfing, dark cloud, if it opens weaker, that tells you they ran out of steam on this one. GAB, S.GAB. Equity Trust. This one you buy on positive trading. J-hook profit taking is over. You're starting back up again. WCN. This one you buy on positive trading. Now, if this opens lower tomorrow, you close out your long position and wait to see what it does once it gets back to the T-line. S-Fund. Another slow curve. If this opens positive, you definitely stay long. YY. Another one that if it opens positive tomorrow, after the consolidation today and after your bullish signals here, tells you they're not going to stay in here, you want to be buying immediately. And then just use today's close as your stop. TTEK. Doji gap up, another one you can buy on positive trading, and with the again, the Doji gap up is your best friend. GDX is the gold market. Just be careful here. It's not really a rambunctious chart, especially if it opens lower. It tells you the downtrend is still in progress. OFNR. I had this one set up for my double doji. There's a double doji. When you have a strong move, instead of one doji, you have two doji type setups. If they open up positive, you want to be buying immediately because this day right here will usually be the same magnitude as this day right here. That's not a rule set in stone, but it's a good high probability trade situation. S.JP Morgan. This one has a slow curve. If this opens positive tomorrow, you still want to be a buyer. U.S. Steel. U.S. Steel needs to open positive and trade positive, but there's your classic, your fry pan bottom, J-hook pattern setup. So it has to open positive tomorrow to stay in it. And RNF, if this opens positive tomorrow, you buy immediately. Notice how they gap this up to the resistance level and then closed right on the resistance level out of a fry pan bottom. And notice the type of trading you had for the last month. Very indecisive. Now they are decisive. Your doji sandwich, you close at the 50. If they open this positive, tells us the 50 is not acting as resistance. You want to be buying immediately. Zynga you can buy on positive trading, a little scoop type pattern setup after a bullish engulfing signal. CCRN, we're still buying this one on positive trading. If it opens positive, it's breaking out through this level, makes wave 1, wave 2, wave 3 in progress. ACHN, nothing there to make you want to go long or short. CYNI, this one, again, I would be out of this one if it opens weaker, and then just put a buy stop above this level. If it comes up, you know your J-hook pattern's in progress. I would rather be buying something with the strength showing up than waiting to see if it's going to curl back up again. Go, you stay short on this one, as long as you don't see a buy signal and a close above the T-line. I don't know what NAD was, MAD. There's a doji sandwich. This one has more upside to it. That's just because on a doji sandwich, you're usually going to see more follow through. CAMT, This one isn't real spectacular anymore. It needs to open positive to stay in it, but it's basically showing us that instead of a breakout in this direction, you're probably going to be at best a slow upward trend channel. Deer, you get ready to go short. You've had a kicker type signal, then you have left-right combo, bearish engulfing, close below the T line, possibly coming back to the 50. And Scotty broke out nicely today. Now what we want to do is see it get through this level, because the long-term chart on this one is you've had a move like this. You've had kind of a big rounding bottom. Now the consolidation's over. They could take it up the same magnitude as this move, which means that would take you up into about the $85 area. CTIC. There's that scoop type pattern. There's a slingshot effect. All you can do with this one is stay long until you see a sell signal. VJet backed off today, but it hasn't broken this trajectory. You're not in the overbought condition right now. So as long as you don't close back below the T line, this trajectory stays in progress. You stay long on this one. Let's see, we did ARIA, PAL. PAL is going to the 200. There's your typical J-hook pattern, right back to the support level. They're going up here to the 200-day moving average. At that point, you have to see what it does, because you might have a big scoop pattern set up. APO. Fry pan bottom, stay long. At this point, I'd probably use this low right here, this open. If it comes down through there, they're coming back to test the T line. And FEYE, there's that kicker signal. You stay long until you see a sell signal. The kicker signal is telling you there's a brand new, very strong investor perspective of this stock. KNDI, backing and filling. Should have taken profits right here. If you didn't, watch to see what it does at the T line, because you do have a fry pan bottom. You do have a J-hook pattern potential. ALKS. This one, you get ready to buy. I wouldn't necessarily buy tomorrow, but I would buy if it broke out through this level right here. And we did First Solar, FedEx. FedEx, you get ready to short on weakness, and Corning, get ready to short. You have a bearish engulfing signal, close on the T line. If it opens weaker, they're taking it down, and where are they doing it? Right at the same level they started selling off before. Is war a symbol? No. Okay, which T line do you normally look at tomorrow's close? Oh, still the 8 exponential moving average. Always the 8 exponential. You use the 3T when you've moved away from the T line. RMTI, you stay short with a good prospect. You're heading down here to the 200. N, this one you stay long, as long as you don't close below the T line. Reggie, this one is getting soggy. If this opens lower tomorrow, they're bringing it back down again, failing at the 50, which you can see they've been failing at the 50. More chance if it were when moving averages are aligned. All right. Why then do we need to use the 3T? Because there's times when, for example, notice how the 3T on this chart, that not only did you move away from the T line, but up here you're way above the 3T, So if I saw something like this, if I happened to be buying right here and it was up here in the overbought area away from the 3T as well as the T line, then I'd flip to my 10-minute chart and watch my 10-minute chart using the T line to see if it was going to come back down to the 3T. I've been listening to Steve a bit over a month now, and I have never had 10 positions open at one time with all good setup, just waiting for rotation. I have a patience problem I'm working on. Okay. Don't worry. It took me a while to figure out what my strategy was. And, yeah, remember, the one thing I tell people is don't take me as gospel. Your trading style and your trading risk-reward factors may be completely different than mine. What you want to do is take the bits and pieces you can find. That's why we have guest speakers on here all the time. Because we're just now setting up our long-term ticks area for those that don't have time to sit in front of the screens all day long or come in the screens often. We're going to have that set up for longer term. We're going to have people like Ralph Acapora, Bob Prechter come in and give us their ideas of what's going on longer term, just so everybody has a different strategies to use for their own making or their own liking. Apple's still in a downtrend, and so you see it close back up above the T line. Facebook, Facebook has a nice J-hook pattern setup. This one you can be buying. There's the classic fry pan bottom J-hook. You can be buying this one on positive trading. Whoops, I don't know what KKD is. That's okay. Now, remember, I repeat things because the illustration I give is every year and every season, constantly, pitchers are shown how to come off the mound on a bunt down the first base line. If they've done it once, they've done it 1,000 times because they have to keep remembering what to do correctly so it's there, that you're not having to think about it. That's the same thing with investing. You're going to have to see the same chart. There's lots of times where I look at a chart pattern or a chart setup, and I think, darn, that is a good one. I need to remember that. I know it's a good chart pattern. I just forget about using it. So AIG, I wouldn't be long or short this one. There's not enough price movement in this sideways move to make me want to be either direction. Okay. All right. My voice is starting to run out of steam here. The analysis on KNDI is that it needs to open positive and trade positive. Otherwise, it's going to come down and test the T line. If it opens lower, you can close it out, and then you can always buy it back if it comes back up through the open. CLDX, this one is going to the 200. David, yeah, I think there's people in here that trade Forex. They're just, now a lot of people ask, can you use Forex with candlesticks? Definitely. Remember, candlesticks are just merely the investor sentiment of whatever trading entity that you're doing. Oh, KKD's Krispy Kreme. Okay. Yeah, that may be getting ready to, there's a left-right combo right here at the 200. If this opens weaker, you've got wave 1, wave 2, going into wave 3. Okay. Okay, let's see. I think that's about it. Tesla, since everybody's following Tesla. Yeah. Oh, I don't know yet, Isabel. Tesla. I wouldn't short it because until I see it close actually below the 50. It's come up through the 50. It's coming back to test the 50 to see if it's going to act as support. in Starbucks, this one you can short. This is going to the 200-day moving average. Is it NAD? S.NAG. Oh, Nuveen Fund. This one you can buy. Nice J-hook pattern. Did we do CLDX? CLDX. Yes, you want to short this one if it's going to the 200. NBIX. I don't skip these intentionally. Usually I get cross-eyed by this time of night. This one you can buy on positive trading. ARW. This one you want to short. There's your bearish doji sandwich, especially if it comes down through the 50. When entering a trade or setting a stop, is slippage a consideration? No. Slippage is already built into the price. Has nothing to do with where the price is. If I was, if they bring a price down to a level, that's not because they're coming to get you. That's because there's selling going on. Let's see. CSUN. Okay, a couple more, and then we'll call it a night. Call it a cold and stormy night. SRPT, you get ready to short this one on weakness. Notice when they brought it back up, they could get up through the 50, but they couldn't get any steam going. There was no real enthusiastic buying except right there. This one tells you if they open it lower tomorrow, you short it. And CSUN. This one, all you can do is stay long as right now as it stays above the 50, number one, and it stays above the T-line. Oh, okay. NBIX is up 64%, which means it's up. Oh, that was right. That was trading up here. So this one was kind of that, that was the chart that if you were following this told you when to start buying. A left-right combo, gap up doji, bullish confirmation, staying above the T-line. Now, does every trade pop up like 45%? No, but the idea is that if you're in a trade where the buying is there, you're hopefully in an uptrend or the possibility of being in a big trade. Oh, I think it's 1 degree here, if not 0, in Pittsburgh, and I still have to go out and feed the darn deer their corn. So with that, yes, so somebody asked, is there training tomorrow? No, but we'll be in the chat room. Anyways, everybody have a good evening. We'll see you in the chat rooms.